Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 16, 2022. Hope you're all doing well. In today's segment, we'll take a look at how to profit from bear market and go from there. First, let's quickly take a look at the market and see how is the market. So I can just go into my watch list here and look at the market. Look, from a market perspective, today we had a down day in the market. Dow Jones Industrial Average, Nasdaq, S&P 500 all down, as you can see here. And then let's quickly look at the broader market and see what's going on here. So you could just go here to the heat map and go to the stock heat map. TradingView gives a very nice heat map here. Look, today is a bloodbath. Market is down big time. Let's put it aside here and go from there. Look, market is down big time here, and Microsoft, Google, all these big tech stocks here all down nicely, as you can see here. There is nowhere to hide in technology. All the technology stocks are down. And look, finance stocks are also down here. You'd imagine as the rates go higher, financial stocks will go higher, but no, financials also came down here, and retail came down, and few areas as usual. Healthcare, few healthcare names are doing well. Look, J&J up slightly, Abbott, AbbVie up, Merck up slightly. So these stocks which are a little more safe haven type consumer staples and healthcare, they're going up slightly, but otherwise it's a broad brush stock market pullback here. A great opportunity to buy some good stocks, and also if you're like me, you can take advantage of the bear market and basically buy some put options or put spreads and go from there. So with that, what we'll do now is we'll look at futures market and see what's going on in the futures market. You can click on the watch list here. I've added a watch list for the futures. As you can see here, we got futures right here. So if you see here, ES1 is a future for S&P 500. So S&P 500 is up slightly, 24 points in the futures market. Nasdaq is also up, Dow Jones Industrial Average, which is YM1 here, that's also up 173 points. So you could expect market to go higher unless something happens overnight. Nasdaq is up by 90 points, as you can see here. Russell, or the small cap, is up slightly, 12 points. So with that, we'll jump into the market and look at a stock screener and go from there. We'll go into the stock screener here, and we got our screener right here, as you can see here. We'll put the watch list in the side here. Look, what I've done is I've looked at I have screened these stocks here. Let's look at my filters and make sure you can also do something similar if you want to profit from bear market. Look, from a filter perspective, I got here I looked at common stocks, the ADRs, like the international stocks like Alibaba and so on and so forth. And then you got some REITs. You got some big REITs like American Tower and all these REITs which are giving some good dividend. And then you got some UITs. I excluded all these other things here, which are mainly ETF and mutual fund and so on and so forth. So that's the first criteria here. Make sure you basically look at the common stocks and some of the other categories. You could just filter for common stocks, that will also work, but you'll miss out on some foreign stocks. And market cap perspective, I made sure market cap is more than $1 billion. So that way, there is these stocks can come down. Their market cap is high, 1 billion to all the way higher, as you can see here. And then we got here volume. I want to make sure volume is slightly high. That's why I made sure volume is more than 500k to 50 million. So we could even increase the volume here. I also like the volume to be a little more higher, so you could change the volume here. Let's go back here. Let's make the volume to slightly higher, so that way it's around, say, 500k is good enough. So in the morning time, I just reduced the volume because market is opening up right now. Because market is closed, you could increase the volume to 500k. And I also want to make sure these stocks are traded pretty okay in 30-day volume. 30-day volume more than 200k. That's the 30-day average volume. So that way it's not one trick pony. Volume is slightly higher on overall on a 30-day time frame. And I want to make sure the price is more than $20 because we are buying the put options. When the price is high, there's a chance these stocks can come down, especially when the valuation is high. And look, price to sales perspective, we call it valuation. I wanted to make sure the valuation is more than 10. That tells you these stocks are highly valued and these stocks can come down, especially when Feds are increasing the rates. And volatility is generally high. I want to make sure these are not low volatility stocks. These are high volatility stocks. That's why these can go down or go up. But because price to sales ratio or valuation is high, there is a high chance these stocks can get impacted because of the Fed increasing the rates. And ATR or average true range, I want it to be higher, at least more than 50 cents here. So that way these are stocks which move up and down. These are not static stocks. That's my criteria here. Basically, I'm trying to make some money off of stocks selling off here. That's why I choose this here. And look, we might have one more criteria here, couple more criteria here. And I want to make sure the simple moving average, the 5-day simple moving average is below 10-day simple moving average. That tells you generally these stocks are coming down off late. From a moving average perspective, these are in a downward trend. And net margin, look, all these stocks have got net margin negative, it's below zero. That tells you these companies don't make money. When you don't make money, that's when they will get into trouble in Wall Street, especially when the inflation fears are high. So that's my criteria. This is my criteria. As you can see here, this is the criteria when I want to sell some put option or put spread and make some money. Look, we got list of stocks here. Typically what I do is I sort these by price. I want to look at highly priced stocks at the top here. Look, we got Palo Alto Network. I love this company, but I don't care at this time because market does not like these stocks which are not making money. I'm the first one to really buy put spread and make some money out of these stocks here. So what we can do is we'll take a look at a couple names here and go from there. I also love stocks which have got high RSI. Look, couple of these names, for example, as you scan through here. Look, we got ALNY. It's got a little bit higher RSI here, 51 compared to other names. And we got Duolingo. Look, Duolingo has got very high RSI here, 55. I especially love to pick these stocks with a little more higher RSI. That tells you these stocks have got more room to fall off the cliff here. So I would typically look at those names to begin with and sell some put spreads on them and make some money. So with that, let's jump in here and look at few names and make some money. Let's start with the Palo Alto Network here. If you look at Palo Alto Network, look, off late it's been coming down. And what we'll also do is we'll open up a chart so that way we can look at the chart here. Alright, so click on advanced chart here. Now we got a nice window here. We got a stock chart at the top and we got the stock screener on the bottom here. So it's a very nice way to look at the chart here. Look, we'll go all the way up. We'll sort this by price and we got our highly priced stock Palo Alto Network. Look, Palo Alto Network, it's off late, it's coming down. Look, it's in a downward trajectory here. So look, that tells you price is coming down here. And from a RSI perspective, look, RSI is around 40 here. Momentum is coming down, as you can see here. On the balance volume seems to be pretty okay here. Not a big deal. So what I would do for these type of stocks, I would go to my favorite platform, Thinkorswim here. I would go here and bring up Palo Alto Network or PANW. Alright, so Palo Alto Network, look at that price, $466, and look, all-time high for Palo Alto is $640. And company does not make money, as we are looked at. And we could look at the chart here. I typically like to do maybe 64 or 92 days out here. For this stock, you could even go, say 92 days out. You give some time for yourself, and stock is at $466. So we could go here to 460. Actually go to 470 here. I would basically sell a put spread here, 470, 460 put spread here, and go from, not sell, buy. So look, I'm buying a vertical spread, 470, 460. I'm paying $5.75 here. The remaining portion of the spread here is my profit potential, which is really $4.25 is my profit potential. So I make money here if the stock comes down. So I could confirm and send this here in my demo account. So let's confirm and send here. Look, what will happen is if I confirm and send this here, look, right now we have paid $575 for this put spread here, which is a $10 wide spread. Our maximum profit is $425, and break-even price is $464. Currently stock price is at $466. If the stock comes down to $464, just $2 below the current price, will break even. So this is a great strategy. I have been implementing this strategy all along. So it's a great strategy to make money off of these high price, high multiple stocks, and go from there. So this is about this company here, Palo Alto Network. We can do same thing in other names here. Let's jump in here and look at one more. Look, we got HubSpot. I love this company. It's a great company, but look what's going on now. It's a company doesn't make money, and it's got a high price to sales ratio. Look at the price to sales ratio right here. We got price to sales ratio, which is very high for this stock here. I'm trying to see where it is. RSI, EMA, and so on and so forth. I think price to sales ratio must be hiding somewhere here, but it's got a high price to sales ratio. That's the scan that we have made here. It's more than 10. That's why it came in this list here. I'll do same thing for this company also. Bring up HubSpot right here, HUBS. And look, HubSpot is down $25 today, and all-time high is $866. And I would do same thing here. I would just go 92 days out, so give you enough time for yourself, because you're buying the put spread here. Stock price currently $281. You could go here to in this case you got 280, 270 here. You could I think this spread is okay. You could do this spread here, 280, 270 spread here. You could buy this spread right here. So you're paying $4.70 here. Remaining portion of the $10 wide spread is your profit potential, which is going to be $5.30. That's a good double your money type proposal. And you could confirm and send. As you confirm and send here, look, you are paying $470 and you're making $530. That's a good profit potential here. As long as the price stays above $275, you will make money. Currently price is at $281, and as the stock market turns ugly, this stock can go lower. You got 92 days to go here. You could confirm and send and make some money with the as the bear market comes through. And you could do the same thing. Look, we got some more names here. I love stocks like MongoDB, same story. These are all high priced names here. You could make some good money off of these stocks as they come down. So with that, thank you very much. Happy investing and trading. Please subscribe.